seemed to surprise us.
Kate, you're absolutely right. We did continue to see those low volumes, and we did see our market closing in positive territory, which was nice to see. We did close up around 0.13% after we did open this morning with some losses. Really, the staples sector, the industrials, financials, as well as the healthcare sector were the worst performers on our market today, but it was the materials space that did in fact keep our market higher. It did close up around 0.8%, and that was an interesting space to watch today. We did see iron ore falling off around 0.66% overnight, so we were expecting a lot of those iron ore players to be in focus and come under pressure and potentially drag that materials space lower. But it was in fact a lot of those gold, copper and as well nickel players that were holding up that materials space. So we did see gold up around 0.2% overnight, so the likes of Medusa Mining, Regis as well as Newcrest were all the best performers on the materials sector. We saw nickel up around 0.4%, so the likes of Western Areas was performing well, and of course copper was up about 0.5%, so we saw Oz Minerals and Sandfire performing well as well. That consumer discretionary sector was also in focus. It did close up around 0.5%, and of course that energy space up around 0.25% after we did see oil prices spiking overnight. So overall it was nice to see some gains on our market.
Over at Bell Direct, for your thoughts on Echo Entertainment today. We keep talking about downgrades or profit warnings, but this was actually good news for Echo Entertainment investors, and as a result we got the stock price shooting up about 7.5% today on the back of that upgrade. What's your outlook for that one?
Kate, it certainly was very positive news today. We did see the company indicating or expecting that their net profits as well as their earnings before interest, taxation, depreciation and amortisation will be ahead of their forecasts, and in fact they were ahead of our forecasts, and also their operating expenditure it is pretty much in line with our forecasts as well. So overall it was a very positive result on the market today. Having a look at the outlook though, we do think there are probably about 3 catalysts to be aware of in terms of investors to be mindful of. Firstly, we do know that Echo is still awaiting that development approval for the $345 million Gold Coast expansion. The total capital expenditure amount for that one is in fact ahead of our expectations of about $200 million. So potentially we do think that we need to be a little bit cautious in terms of capital expenditure blowouts in that area. Secondly, the decision on the Brisbane expression of interest we know isn't due until around the early 2015, and the capital expenditure for this is estimated to be in the range of around $1 billion. And then finally, we are still waiting to hear whether Genting will get approval to increase its stake in the company. Obviously, this has been on the cards for over a year now, but if it does come through, it could be a positive catalyst. However, we probably do remain a little bit cautious in the long term around this stock. There is a little bit of uncertainty around its development pipeline, so we probably prefer stocks such as Crown and Sky Entertainment in that casino space.
I wanted to get your view on a stock you've been watching, Leanne, which is UGL. We know that it's selling its real estate business. Do you see this as a positive move?
In the medium to long term, we certainly do see it as a positive move, Kate. We did see the stock closing up about 0.6%, but for most of the day it was in fact trading relatively flat. We do know that they are expecting to generate sales proceeds of about $1 to $1.1 billion. So really we need to hear out more from the company on how they plan to use these proceeds, whether they plan to fund acquisition, organic growth or return capital to shareholders. We do know that they have been considering Transfield as well as Leighton's John Holland units. So really that is just speculation at the moment. We are waiting to hear more out from the company. However, in the short term, potentially we could see a little bit of volatility in the stock. Obviously, we know that the deal isn't due to finalise until around September, so there is always that risk that it could potentially still fall over. And of course, we also did see a new CEO being appointed today, and that often does create a little bit of uncertainty in the short term. However, looking medium and long term, we do certainly think it is a positive. We did see their first half result reported was in fact very weak, where in fact their balance sheet did look to be very overgeared. Their debt had increased to around $660 $262 million, and their gearing had increased to around 35%. So I think as a result of the sale of their business today, the company's indicated their gearing could potentially reduce to around 28%. So I do think that their balance sheet should improve as a result of this transaction. However, we do still have some concerns around the performance of UGL's engineering division, so that's something still to be mindful of. But certainly in the medium to long term, we do think it is a positive move today.